Hey everyone, welcome back to the channel. Today, I want to talk about something that might sound intimidating at first but is actually one of the smartest and easiest things you can start doing for your future: investing. I know that when most people hear the word investing, they instantly think about Wall Street, rich people in suits, or needing thousands of dollars to even get started. But the truth is, in 2025, it doesn't matter how much money you have in your pocket, you can literally start investing with just $10. Yes, $10. That's less than 2 cups of coffee or one lunch at a fast food restaurant. And if you understand how to use that small amount wisely, it could change your life because you'll learn the one skill that builds real wealth: making money work for you instead of you always working for money. Let's start by resetting how we think about investing. For generations, people believed investing was something only financial experts or rich families did. The average person was told to save whatever is left, put it in a bank, and hope for the best. But that mindset is outdated. Today, thanks to technology and financial apps, you can start investing with tiny amounts, track everything from your phone, and grow your wealth over time. Investing isn't about timing the market perfectly. It's about time in the market, staying invested and letting compound growth do its magic. Once you understand it, the fear of not having enough money disappears. So imagine this: you've got $10. You might think, what difference can $10 make? It's nothing. But that's exactly the wrong mindset. Every investor who has ever become wealthy started somewhere small. $10 is not the destination, it's the beginning of a habit. When you invest even a small amount consistently, you train your mind to prioritize growth over instant gratification. The rich don't get rich overnight, they get rich by doing ordinary things consistently over time. That's what you're about to learn. Now, before you start, it's critical to understand what investing really means. Investing is not gambling. It's not putting money into random crypto coins and hoping they explode. It's putting your money into assets that produce value, businesses, properties, or funds, and letting that value grow while you sleep. These assets generate income, dividends, or appreciation over time. The earlier you start, the more time your money has to multiply. That's why even $10 today is more powerful than $100 a few years later. So, how do you start with just $10? Step 1 is choosing the right platform. In 2025, there are dozens of apps designed specifically for beginner investors. Platforms like Robinhood, Webull, Public, or eToro, depending on where you live. If you're outside the US, you'll find platforms like Revolut, Trading 212, or even your local digital brokerage offering fractional investing. Fractional means you don't need to buy a whole share of an expensive stock. You can own a small piece of Amazon, Apple, or Tesla for as little as $1. That's game-changing because it democratizes investing. You no longer need thousands to participate in the same companies that make billionaires even richer. Once you've picked an app, step 2 is understanding what to invest in. Here's where most beginners get nervous because there seem to be endless choices: stocks, ETFs, crypto, commodities, real estate funds, and more. But you don't need to overcomplicate it. The simplest path for beginners is to invest in low-cost index funds or ETFs. These are groups of stocks bundled together to represent major parts of the economy, like the S&P 500. Instead of trying to pick winners, you invest in all the top companies at once. Historically, the S&P 500 has returned roughly 8 to 10% per year on average. That might not sound exciting, but over time, compounding turns it into serious money. If you invested just $10 every week for 20 years with a 10% return, you'd have over $30,000. That's the power of small, consistent action meeting compound growth. Next, we need to talk about mindset because investing isn't just about numbers, it's mostly emotional. The reason most people lose money in the markets is not because they make bad picks, but because they panic. When prices drop, beginners sell out of fear. When prices rise, they jump in too late. The rich and successful investors do the opposite. They stay calm, they buy consistently, and they think long term. When you invest with small amounts regularly, you train yourself to stay steady regardless of market noise. You stop trying to predict every up and down and instead trust the process. Let's get realistic about risk, too. Every investment carries some risk. There's no guaranteed path. But risk is not the enemy, unmanaged risk is. If you invest money you need next week for rent, that's foolish. If you invest long-term funds meant for your future, that's wisdom. The rich understand time is their best friend. The longer your money stays invested, the more it can recover from short-term volatility. That's why starting early, even with $10, matters so much. Starting today gives your money more years to grow. Now let's talk about compound interest, the most powerful force in personal finance. Imagine you put in $10 that grows by 10% annually. At the end of the year, you have $11. In the next year, you earn 10% not just on your original $10 but also on the gained $1, so now it grows faster. Over years, this process accelerates like a snowball rolling down a hill. Albert Einstein allegedly called compound interest the eighth wonder of the world because it makes time your partner. Most people underestimate what they can achieve in 10 years and overestimate what they can do in 1. Investing works exactly like that. The rewards appear slow at first, but they build exponentially. Alright, you might ask, what should I avoid as a beginner investor? Excellent question. First, avoid chasing hype. When you see everyone online talking about a hot stock or a guaranteed crypto pump, remember that hype fades but discipline compounds. The second mistake is investing all your money in one place. Diversification is your shield. Spread your investments across industries, companies, or even countries, so that when one area performs poorly, another can balance it. Third, never invest money you can't afford to lose. Investing requires patience. It's better to build wealth slowly than to gamble fast and lose everything. Another big lesson from seasoned investors is mastering your emotions. In bull markets, when everything goes up, people think they're geniuses. In bear markets, when prices crash, people think the world is ending. The truth is, both extremes are temporary. The rich don't get emotional, they get strategic. They might buy more when prices are low, but they don't panic sell. The longer you stay invested, the more you realize that time in the market always beats timing the market. Now, let's imagine a simple investment plan. You start with $10 this week. That's your initial seed. Every week, you add another $10. It's easy, consistent, and builds a habit. After 1 year, that's about $520 invested. If the average market return is 8%, you've earned around $40 profit. It's not huge, but here's the secret: the numbers grow faster the longer you stick with it. In year 5, you might have a few thousand. In 10 years, depending on returns, you could be looking at over $8,000 or more. And if you raise your contributions gradually, say you start adding $25 or $50 per week when your income grows, the results explode. Some investors who began with pocket change end up with six-figure portfolios decades later because they stayed consistent instead of chasing quick wins. One of the smartest things rich people do is treat investing as a non-negotiable habit, just like paying bills. They invest first, spend later. They automate their contributions so they don't have to rely on willpower. You can do the same. Set your app to automatically invest a few dollars every week. That way, it happens in the background, effortlessly. Automation helps you stay consistent through ups and downs because you remove emotion from the equation. Let's also touch on education, because knowledge is your best investment. The more you learn, the less likely you are to fall for scams or bad advice. Watch educational videos, read simple investing books, follow credible financial creators. Don't just copy people online, understand why something works. The rich always keep learning, even after they become wealthy. You don't need to be a financial genius to begin, you just need curiosity. Another key part of becoming a successful investor is patience. Real investing is not exciting in the short term. It's slow, disciplined, and often boring. But boring gets rich. The daily ups and downs mean nothing when you're focused on the next 5 or 10 years. If you look at billionaires or even everyday millionaires, none of them got there by flipping investments overnight. They played the long game. They planted seeds and let them grow. You can do the same, starting from where you are right now. Let's talk briefly about reinvesting. Whenever your investment earns dividends or profits, instead of withdrawing, reinvest those gains. That's how you accelerate compounding. It's like planting trees and then planting the seeds from those trees to create a forest. Every dollar reinvested becomes another worker earning more dollars for you. Over time, your money begins producing more money than your job does. That's the ultimate goal, financial freedom. And here's a mindset hack that wealthy investors often use. Don't think of investing as losing money temporarily, think of it as buying time. Every dollar invested brings you closer to the day when your money works harder than you do. That's freedom. And that's priceless. The earlier you start, the more time you buy back in the future. Now let's be clear, starting small doesn't mean thinking small. $10 is your entry ticket. But what really matters is consistency and mindset. The rich became rich because they learned the game of money. They didn't let fear stop them. They started, made mistakes, learned, and improved. Every investor you admire today once made their first $10 investment too. So let's imagine your first step right now. After watching this video, open your phone, download an investing app, and deposit $10. Don't overthink it. Invest in a broad-based ETF, or pick one solid company you believe will grow over time. See how it feels. That single action moves you from a consumer of the economy to a partial owner of it. You are now playing the same wealth game as billionaires, scaled to your level. And finally, let me remind you, investing is not about luck, it's about behavior. If you invest small amounts regularly, avoid panic, reinvest returns, and keep learning, you will build real wealth. It might not happen this year or next, but give yourself 5 to 10 years, and you'll be amazed at how far you've come. The hardest part is starting, the easiest part is continuing once you see those first results. So, my friend, start today. Don't wait until you have more money. Start with $10, the same way everyone else who built wealth did, small, steady, and smart. A year from now, you'll be grateful you took that first step. Remember, time is money's best friend, and the sooner you start, the more your future self will thank you. Thanks for watching. If this video inspired you, give it a like, subscribe to the channel, and share it with a friend who needs a push to start investing. You don't need to be rich to start, you start so you can become rich. See you in the next video, and until then, keep learning, keep investing, and keep believing in your financial future.